Hey, welcome back everyone to the Miami Realty Rundown. I'm Carlos.
And I'm Ideal.
So today we have Edgar back. Remember Edgar? So we are going to kind of dabble in the 50-year mortgage hype that's been going around and being presented by our President Trump. As obviously it's hypothetical, it's nothing real right now, but we wanted to touch up on it and see if it's actually makes any sense for you or for anyone to do it if and when and it kind of comes a reality, no? So right. Edgar, how you been?
I've been well, brother. Thank you so much for having me back.
Welcome back.
Thank you so much for having me back. And yeah, that's definitely a trending topic. Also, the mortgage transferable. You talked about maybe you can bring your 3% mortgage over to your next house. So we'll definitely dive into those two and see if it even makes sense for people to do something like that and how it would work. So I'm excited to be here.
Right. So, okay. So, I mean, in essence, what he's saying is if we do a 50-year, it makes it more affordable for especially our younger viewers to be able to finance their first purchase.
Correct.
So, does it? I mean...
Well, we currently have a 40-year fixed mortgage that's available today. And on that one, you have to put 10% down to obtain the mortgage. Because to be able to get in there, you got to have a little bit of equity right out of the gate. It's not going to be an FHA 50-year fix if it was to come out. Because the current 40-year fix is not government-backed or anything.
So the 40 years, your regular conventional?
It's not a conventional loan either. It's considered a non-QM, non-qualified mortgage.
Okay.
Kind of falls in that arena. So it's not, Fannie or Freddie, and it's definitely not FHA. And on that one, you do have to put the 10% down.
So 10% down, and you kind of only look at bank statements and...
Well, that one would be full doc.
Okay.
Or in some cases, if the person's self-employed, then we can look at bank statements to approve them that way. But that's definitely an option that's available today. So I'm assuming that if we go to the 50-year option, it's probably going to be something similar where they have to come in with the 10% down. It's not going to be down payment assistance, first-time home buyer grants, and none of that stuff. Because that's not what's available even for the 40-year that's here with us today.
So yeah, it'd just be extending the current 40-year.
Correct.
By 10. Okay. So
I guess what people talk about the most, right, is does it really make sense to do a 50-year mortgage? So you brought some numbers for us today.
Yes.
Let's dive into that to see if it really does make sense because being honest, most people don't live in their home for 50 years. That's number one. Number two, they can put in a little bit more towards principal because the first few years, it's full interest. You're paying full interest.
Pretty much. I mean, if you get so you can't see the numbers, so I'm going to try to simplify it as much as possible. But let's say you buy a house, $400,000, you put $40,000 down, which is 10%. And then you keep it for 5 years at a 7% interest rate, you've really only paid down the balance by $10,000.
Which is nothing.
Correct, which is not a lot. The monthly payment's coming around $21.70 versus a 30 years like at $23 and change. So you are saving a little bit of money monthly, but if you're buying in Miami, you're going to have good equity growth, about 5% appreciation a year. So over 5 years, you will have an increase in value by like $110,000, but you really only pay down your principal by $10,000. Right. So there isn't that much equity growth based on what you paid down. It's because you live in lovely Miami, where we're at today.
Right. But okay, does it really actually make it easier to qualify?
Well,
because the savings isn't a lot. I don't think it is.
Well, when you're saving $200 more per month on the monthly payment, it will help with the affordability aspect because your debt to income ratio compared to the 30-year fix is not going to be lower, assuming we can also go up to 50% debt to income ratio. So in that regard, yes. But does every first-time home buyer have $40,000 to put down.
Right.
Typically, no. Most first-time home buyers are using a conventional 3% down
Or 3.5.
3.5 FHA. So when we're comparing to that arena of clients, this might not be a program for them, where it's going to save them money because they're not going to have the money to put down.
Okay. Yes.
So it makes sense more for someone who's going into a second home.
Yeah,
The
or
third home.
somebody that has the 10% or maybe a little bit more to put down.
Yeah.
And with the equity growth, or I'm sorry, with the principal balance only being reduced by 10,000 over 5 years, I don't know many banks that are going to want to take that risk of giving a mortgage where
That makes
their
sense.
balance is not being paid down very much. Yes, they're earning a lot of money on interest and therefore profit, but it's also very risky because other areas are not going to have the same type of equity
Correct.
growth as Miami has. You know, Florida is the #1 state where everybody wants to come live, but when you're looking at other states where they don't have that kind of demand,
Appreciation.
this is not going to be good.
Yeah, I don't know if it'll work nationwide.
Yeah,
That's the
correct.
thing.
So maybe certain areas it might. That's why I think it's still very much up in the air.
So I think
Yeah.
this is more like for Florida, California, New York,
Yeah, where you have
big-
where
those.
you have big,
The big states.
yeah, markets.
Correct.
Yeah, more Midwest, U.S. I don't know.
Yeah, it might be much tougher for them.
Yeah.
For sure.
Now, does the interest rate, is it higher? Like on a 50-year mortgage or about the same as any other?
Given that I don't know what rates are going to be because this program is not available, so
Right.
I'm comparing it to the
the
40-year,
right.
and the 40-year is higher
Okay.
than the 30-year.
Okay, so it might be higher too then.
So it might be around like the high 6s to 7% is what I've seen on the 40-year. I mean, the 40-year that's available now is pretty neat because the first 10 years on that program, you put your 10% down, then the first 10 years you're paying interest only. So just to give you an example,
With no prepayment penalty, right? Like
Correct.
they can send more to their principal and try to, okay.
yes. So just so everyone's aware, on primary residence, it is not permitted for any lender to put any type of prepayment penalty. You can get a prepayment penalty on an investment property, but not on a primary or a second home. So that's definitely not going to be an issue. So if you have a price of 900,000, if you have a loan of 900,000 and you have a 40-year mortgage, the first 10 years it's interest only, so you're only paying $4,500 a month. This is at a rate of 6%, as an example. If you're on a 30-year, and then when it goes to 30 years, so the first 10 years you pay interest only, $4,500. Then when you get to year 30, then you're going to be at $53.95 per month. So you could see, but now you're paying principal and interest. So you could see how there's a jump. Now, when somebody's qualifying for this type of mortgage, we're qualifying you at the $53.95, not the $4,500.
Right. To make sure they can cover
Yes, because we want to make sure that the person that's taking the mortgage, they qualify for it, and they don't later on end up defaulting on it because their payment went from $45 up to $53.95.
So basically, the borrower is paying the bank for 10 years to give them 10 years.
And this $4,500 is interest
out?
only. Yes, it does save you more money, and you are completely allowed to send additional money towards principal if you choose to, at any moment, to start paying down the balance.
Is there a minimum of how much they can send monthly towards principal? Like,
There, on any loan, you can send any amount
Whatever
that you
you want.
have towards
Okay.
principal. Yes, so there's no restrictions.
so you can send
Do they really
50
have to do
bucks.
it like they say? Send a separate payment, or can you just add to the same payment and they'll?
So whenever you get your payment slip, you're gonna check the box that says principal, and then you're gonna put the amount in that box. If you
separate.
do one check for the entire amount, they will just get that check and add half to and split it up and put some towards interest rather than putting the additional amount that you placed towards principal.
Okay.
So you have to specify
I
it
figure
on your
because your
pay
interest is amortized, so there's a
Yes.
specific interest amount for that month.
Correct.
So the difference should be applied to principal, but I
Yeah,
just
you
wanted
have
to
to
see.
be specific, otherwise
They're not gonna
they'll
work.
They're
apply.
gonna do what they want.
Yeah,
You're not going to work that hard.
Okay.
exactly.
Just putting it out there so that you,
Yeah, if you are gonna send any money towards principal, always specify it. You don't have to send a separate check. Just specify the amount on the pay slip.
Okay.
okay. Keep a copy of it.
Yeah, just check it later.
Yeah.
And it's much easier if you pay online. You can just click,
Yeah, select
Yes.
the one.
select the amount, and then they draft it out of your
Yeah.
account.
Done that
Easy
one.
does
I
it.
can't remember the last time I sent
Yes.
a payment slip.
I was going to say, not many people have receive a payment slip and send it by mail anymore. It's definitely either online or to the app.
Yes.
But just
I
select
concur.
regardless. Yeah. Okay. Pretty cool. Okay. So do you see this 50-year mortgage becoming a thing, or do you
It's just
think
like a
it's
talking
just
point.
a talking point
I
to
think it
strike
was-
up interest, or
I think it was more of a talking point of like, look, we're doing something, or we're thinking about doing something. So people are like, oh, and then all of a sudden everyone's talking about this 50-year
Yes.
mortgage.
yeah, they're giving their own opinions about
Yes.
it, and
So we wanted to give ours.
yeah.
exactly.
So
And
I mean, I think it's okay if we're gonna talk about opinions. I think it's it'll help a lot of people qualify that cannot qualify now. At least it'll give them the opportunity to qualify. At the end of the day, foreign few people spend 50 years in their home as it is.
Right.
And if their fear is not having enough payment going towards principal, just send it an extra 50, $100 a month, and you kind of balance it off a little bit, maybe. Oh, it's like 6, 7. Sorry,
Oh,
I
don't.
didn't throw that in there.
Cut that out. Cut that.
I did this, and my daughter has spent all weekend.
Oh, God, yes, mine does too.
God. I'm like, what does that even mean?
Well, the little one, at least.
Let's go back to it. Yeah, I mean, just send a little bit more towards principal, and it should
Yes.
kind of compensate, right? Like, as to what you're.
I don't know
I
that it's
guess-
going to compensate, but it's definitely going to help.
It'll help.
Any
you know?
extra penny will help.
Save towards interest, particularly
Yes.
in this case, because most of it, more than half, goes towards interest.
Yeah, way more than half is going towards interest.
We kind of did the math. So what was the number going towards interest? Was
Like 90%.
So if you're
How
only
much?
paying down $10,000 in 5 years, you're really paying towards principal. It was like $167 every month.
Jesus Christ,
Right.
nothing.
The rest is all interest.
yeah, on 90. A lot of it.
So to your point,
Big chunk.
affordability because of the debt to
That
income,
hurts.
you're going to be about $200 less than the 30-year fix. So that will allow you to qualify for a little bit more. But the challenge for all first-time home buyers, in my opinion, is going to be coming in with the 10% down, or whatever the down payment requirement is going to be, because it's either going to be 10% or it's going to be higher.
Right.
So minimum, yeah, we think it'll be a minimum 10%.
Yeah, given that the 40-year that's available today is a 10%.
So
That's why I'm
you're-
going with that figure.
So the FHA, the 3% conventional, 5% conventional is out. More than likely.
For the 50-year term, I would think so.
I would, yeah.
Yeah. I don't think it'll be available for the agency loans or the government loan.
Yeah. Well, if it is, we'll see. I mean, again, this is all
Hypothetically
hypothetical.
Yeah.
So
It's up in the air still.
this is just what politics is saying right now to either make themselves look good or actually make something happen. But we'll see. We'll find out.
It's definitely drawing attention. So
Yeah. You know what's the other thing that's drawing attention?
what?
The loan transfer.
Oh, wait, do we have to save that for another episode?
Save it. Part 2.
Save it, yeah. Let's save it.
Guys, thank you for visiting and listening to
Thank
our
you so much for
hypothetical.
having me.
Yes, we love to have Edgar here, and stay tuned for our next show where we talk about that portable mortgage. Thanks.
See ya.
Let's see.